Good afternoon and welcome to GrainTV. It's November 30th, 2012. I'm Logan Burgess. Joining me to my right here is Brock Shimano. Well, Brock, let's jump into fire tip. Take a look and see how the grains ended up here on a Friday afternoon. As we can see, we have March delivery corn trading down 5 cents. Soybeans for January delivery down 7 1/4, and we had Chicago wheat off 22 1/2 there on the March contract. You know, this is the first day we are using the March contracts here on fire tip. First notice day for December was today, so it's time to start rolling to March for all your hedging needs there. If you have any questions about that, feel free to give the office a call here. We can help you out. Brock, overall, though, a weak close to the week here in the grain market. You know, yesterday we saw export sales lag. It seemed like fundamentally and technically it was kind of a bearish tone to the end of the week. What's kind of your take on this corn market right now?
You know, I think we did see a little bit of continuation of what we saw yesterday. Yep. Yesterday, corn and wheat in particular sold off. Wheat really sold off pretty sharply today. And I think most of that was based on the fundamentals. We had weak export sales, like you were saying. But, you know, I think we just saw a continuation due to some technical selling today. On the corn chart, if we take a look at the March daily chart here, you can see that we did hit resistance level around that 100-day moving average, which is the red line here. We hit that yesterday. We sold off for the next, the rest of the day yesterday into the session today. And right below that, I'm kind of looking at support levels from the 50-day moving average and the 20-day moving average. These are going to be minor support levels, not a whole lot, a lot of stock to put in these. But if we do end up falling through those, which I kind of think we will if we continue to see weak fundamentals, we'll probably end up back down towards that 720 area, which will be the top end of the downward trend that we've been in.
Yeah, you know, Brock, I wouldn't be surprised to see that either here, especially considering the fundamentals in this corn market right now. Soybeans, though, a little bit of a different story in my opinion. What's kind of your take on this bean market? We've seen strong export sales. It seems like it's shaping up a little bit differently.
You know, soybeans is a little bit on better footings fundamentally, although this week we did see pretty weak export sales, but we did see strong soybean meal sales, strong soybean oil sales. So I think that did put a little bit of a bid under the market. But if you take a look at the charts here, we did meet some technical resistance, the 200-day moving average, which is the red line coming in here. You can see we bumped up against that. We also hit the top end of the downward trend that we've been in, right around the 1455 area today. So we did sell off, but you know, if we continue to sell off, maybe we see some more information on South America. It looks like Argentina might be increasing their soybean acreage planted that they anticipate. We could end up moving quite a bit lower, and I think we're the ultimate spot we need to be looking at on the downside is about that 1395 area, which is a long-term trend that we've been watching.
Certainly, Brock. You know, that's kind of what we saw here this week for the futures market. Let's kind of jump into the cash market here real quick and just run down the changes that we saw here. As what you're looking at right here is the spot corn basis change here. And as you can see, not a lot of changes this week to report on, kind of mixed throughout the country here, but on average up 1 cent for spot corn delivery here across the U.S. This was good to see, really, despite a weak pace of ethanol production and a weak export market for corn that we've seen in recent weeks. Not a huge story there, but let's take a look quick at soybeans here for spot delivery as well. We saw soybeans up 2 cents on the week, and that was really supported by strong export demand here recently. You know, as you mentioned, Brock, yesterday we didn't see great export sales of soybeans, but throughout the marketing year right now, they remain kind of the strong suit within the grains. If we take a look, though, we're kind of getting two markets developing within this spot soybean market. Those markets that are north of St. Louis, Missouri, and markets that are along the river south of there. You know, Brock, we've heard a lot of discussion about potential closures on that section of river between St. Louis and Cairo. So I think right now, you know, what we're seeing is those southern elevators bidding basis up, trying to get the grain before the rivers close, and real weakness across the higher areas there, you know, north of St. Louis there. Bottom line, though, for producers right now, we expect this to continue to weigh on basis there in your area, unfortunately, if you are north of St. Louis. But the one area that people should take away from this is that if you're out east, if you're in the eastern corn belt, there could be some good cash marketing opportunities for you, especially along the Ohio River, which may have to kind of pick up some of the slack here that we're not able to source out of areas like Illinois and Minnesota here in the coming weeks. But we'll keep you posted on that here on GrainTV moving forward. You know, Brock, I think that wraps up our show here for Friday afternoon. Thanks a lot for joining us, everyone. Have a great weekend. We'll see you back here Monday.